The real estate market is about to get hit by a tsunami that nobody's talking about. 5.6 million Americans just lost their ability to buy homes overnight, and most don't even know it yet. In this video, I'm going to show you exactly how the student loan crisis is about to reshape the entire housing market and whether you should buy now, sell now, or wait it out. My name is Bishoy Habib, and I'm the realest real estate attorney you know. Over the past 13 years, I've closed over 1,000 transactions totaling $12 billion. I've seen market crashes, booms, and everything in between. There's no doubt we're in a correction at the moment, but what's happening now with student loans could turn a bad situation into an unmitigated disaster. Here's what's happening that most people are completely missing. We just witnessed the single largest credit event in American history that did not involve banks or mortgages. 5.6 million people became delinquent on their student loans in just 3 months when the Trump administration put them back on payment plans, because remember, during COVID, they had paused all that. The credit scores didn't just take a little hit, they got obliterated. So people with 720 credit scores, which is prime credit, saw their scores drop to an average of 543. You're not getting a loan with a 543 credit score. And so overnight, millions of qualified home buyers became unqualified. But here's where it gets really interesting for the real estate market. Morgan Stanley economists estimate that this will pull $1 billion to $3 billion per month out of the economy. That's not just any spending, that's spending from the exact demographic that drives the housing market. Millennials and Gen Zs in their prime home buying years with high income and good jobs. Here's the math that should terrify you if you're trying to sell your house right now. A typical buyer who was qualified for a $350,000 mortgage suddenly has a $400 a month student loan payment that they weren't making during the pandemic when this was all on pause. Now that $400 payment drops their buying power from $350,000 to $280,000. Multiply that by millions of buyers, and you're either getting dinged on your credit, so you can't get the loan, or your income is going down, and so you qualify for a lower housing cost, right? So you've got a massive demand destruction event going on here. But it gets worse. There are still 8 million borrowers on the SAVE plan who are not making payments yet because it's tied up in courts. They're gonna have to start paying later this year or early next year. So we haven't even seen the full impact yet. And what's interesting is that the delinquency rates are not uniform across the country. Mississippi, for example, has 45% of borrowers delinquent, which is the worst in the country. States with high poverty rates and lots of community college and for-profit schools are getting hit the hardest. So markets in these areas are about to see massive demand drops. Another point that nobody's talking about is that we're slowly starting to see a divide between the haves and the have-nots. I was talking to a buddy last week who's a developer, and he told me he's seeing 30% fewer qualified buyers for entry-level product, but his luxury product is selling just fine, and a lot of it is cash. The student loan crisis is accelerating the wealth gap in real estate, especially with foreigners with cash. Here's another angle nobody's discussing. Rental demand is about to explode. All those people who can't buy anymore, they still need somewhere to live. If you're a rental property investor, this could be a great opportunity. But here's the plot twist that could change everything. Remember, we're not just talking about people who are financially irresponsible. 400,000 people with credit scores over 720 got caught in this mess. These are responsible borrowers who likely will figure out how to fix their credit and get back in the market. The question is, how long will this take? Some will get on income-driven repayment plans and rehab their credit within 6 to 12 months. Others might be locked out for years. It creates a very interesting dynamic. We might see a sharp drop in buyer demand over the next 6 to 12 months, followed by a surge as people get their credit fixed and re-enter the market. That's just me speculating, but could happen like that. There are a ton of investors on the sideline right now waiting with dry powder, as we call it, which is cash ready to deploy, waiting to buy these opportunities. And to me, that's the big difference between 08 and today, right? 08 was a liquidity crisis, right? So there was no money available. Today, there's not a lack of liquidity. There's a ton of liquidity. There's a ton of people in the space waiting to deploy capital, dry powder. And so the money's there. I think the people are just on the outside, they're just waiting for the deals to happen. They want to see how much further it will go. Now, another point to mention with all this is that the government just restarted collections on defaulted student loans. So they now garnish wages, take tax refunds, grab federal benefits. So imagine if you're a homeowner already struggling to make your mortgage payment, and suddenly the government starts taking money directly from your paycheck for old student loans that you hadn't thought about in years, like pre-COVID. How many people are going to be forced to sell their homes? We could see a wave of distressed sales unlike anything since 08. Now, if you're wondering what this means for home prices, here's my take. In markets heavily dependent on first-time home buyers, like suburbs and starter home markets, prices are going to come under serious pressure. So what should you do? If you're thinking about selling, especially in a first-time buyer market, consider doing it sooner rather than later. The buyer pool is shrinking every month, and the real tsunami that we talk about is just starting. If you're looking to buy and you have good credit and stable income, this could be your moment. Less competition, nervous sellers, better negotiating power. And if you're an investor, start building your war chest of cash, because the distressed opportunities are here and they're going to continue. The student loan crisis isn't just a personal finance problem, it's about to reshape the entire real estate landscape. Markets that depend on young, first-time homebuyers are going to struggle. Markets driven by cash and high-income buyers may not struggle as much. The key is understanding which category your market falls into and position accordingly. This isn't speculation, it's already happening slowly. The question is whether you're going to get ahead of them or run over by it. If this analysis helps you understand what's really going on in real estate, hit that like button and subscribe. The next few years are going to be wild, and you're going to want to make sure you're getting the information you need to navigate them successfully. In real estate, timing isn't just important, it's everything, so you need to make sure you're informed on what's going on. Until next time.